Man, Gold Killer, way to be here. How's it going, man? So first, I'm actually gonna go to the trend template that we've been watching. It's very interesting how it's been. So this is the trend journal that I've been watching that I have, and what it was is we had like 40 straight days above the 21-day moving average in Nasdaq. QQQ is what I'm using exactly to as it. And then we broke below, and then we had a couple days below. We had 2 days, 2 or 3 days below the 21 day, and then yesterday we broke right back above, and today we continued higher. And so that's one thing I am noticing is that we did have a heavy bounce. Yesterday was a 2% down, 2% up day, and then today it wasn't as heavy, but we've seen some continuation, led mainly by semiconductors. I'm sure most people saw Nvidia. Nvidia had an insane move up to 530 or so from like 490 just in the last couple days. SMCI, that one went insane from about 295 to 350 just since Monday, and it's only Tuesday. And so though we have seen some crazy moves in, but it's mainly semiconductors and it's like semiconductors, cybersecurity, and biotech is what I'm seeing the most, the biggest moves on. We did confirm our first 5 days of the year bullish. And so that's a positive for the rest of the year. We mentioned that a couple weeks ago, how we were looking for the first 5 days of the year and the Santa Claus rally plus the first 5 days plus January in general to close out as a positive. We did not get our Santa Claus rally. That was unfortunate. But it was a well-needed pullback. But we did get our first 5 days. And so that was a positive from the closing of the first day of the year to the closing of the fifth day of the year, we were positive, and that was on Monday to this week. Sorry, had to get a drink of water. So with that, we are now, I had to put it back in an uptrend as just we are above the 21-day moving average. That's how I depict it. I'm doing this 100% mechanical, whether we're above or below. There's no if, ands, or buts, no in-betweens. It's just yes or no. And so that's kind of one of the reasons why I do it is because it just gives a full mechanical way. I was wondering yesterday, I said, okay, well, we're below the 21 day. Yesterday was the day that, okay, well, we needed to get back above the 21-day moving average in order to continue to the upside. And then today needed to hold above that as well and above the 10-day. Because yesterday we actually got above the 10-day as well. And EMA. And so now like we'll be looking to fill this gap pretty easy, but I'm not convinced yet that we are fully like not gonna go sideways a little more. Maybe we continue up higher and then go sideways for some of February and see a pullback there. Because I would like January and as a whole to close to the upside. That doesn't mean that it has to be up by 10%. It can even just be 1 or 2% or even half a percent as long as January closes up for the month. So that's a huge thing I'm watching. One thing that I did notice is we didn't get the Santa Claus rally in the NASDAQ. So that would have been from the 22nd here, right here, the close of the 22nd to the close of the 3rd. It was negative for Nasdaq. If you go to the S&P 500, oops, this is the Russell. The S&P 500 not as negative, but it was negative as well. There's the 22nd and then there's the 3rd right here. But the Dow was the leader and confirmed a Santa Claus rally. And so we have this is the 22nd right here on the Dow and then the 3rd was right here. So it wasn't by much, but just by like a tick or two, the Dow confirmed the Santa Claus rally. So it did get the Santa Claus rally. The Dow did get the first 5 trading days in as a positive. Actually, I don't think it did. The Dow did not, but Nasdaq did. Yeah, the Dow did. That was yesterday. So got the first 5 days, trading days as positive, got the Santa Claus rally. So that just gives more confidence for me that the rest of this year is going to be bullish. And so pullbacks for like February pullbacks or longer term pullbacks are meant for buying opportunities. I'm really looking for pullbacks to 21-day moving average to 30, 21, 30, and 50-day moving average. I think QQQ or SPY literally bounced right off of its 30. Not a moving average I use often, but I see Robbie using it more, and I know Stan Weinstein talks about it. Yeah, right on the 30, and then SPY, I'm pretty sure was the same thing, right on the 30. So I've seen some people using it a lot lately, but it's not one that I've been trained to use very often. So I don't. I've always used the 50 and the 21, which the S&P barely broke below the 21. It was only below for 1 day and then pivoted right away. So you could say that it is still in the same uptrend, depending on whether the rules are kind of you there. It's always discretionary on my trend journal, obviously. So since the Dow and since the Dow and the S&P didn't break below the 21 day, but Nasdaq did, you could have said that, oh, they're just stress test days. Um, and so that's just kind of to each his own. It's your own thought. S&P is not quite at all-time highs, but it's starting to form a swing low on the weekly chart. So you have a low and the lower low is up here. But it just kind of depends on how we act next next few days. We have no news on Wednesday, and then we have CPI Thursday and PPI Friday. So really depending on how the inflation numbers come out, that is one thing I will be watching. I do notice as well that the sell volume is higher than this buy volume we have. We have declining buy volume and we had higher sell volume, higher than average sell volume, and not higher than average buy volume in the SPY. Let's look at the Qs real quick. Barely higher than average volume, but declining. And we had incredibly higher than average volume on these couple sell days. So that is just something to keep note of. It's nothing actionable, nothing that we can really do anything with, but it's something to take note that it's to keep track of. We do have um, one, two, three distribution days on the Nasdaq, and that's just days that are above um, within 25 days. Well, let's just go back 25 days because this could be another one right here. No, that's not. So within 25 days, days that are above the previous day's volume on down days above the previous day's volume. So right here is distribution day 1, right here is distribution day 2, right here is distribution day 3. And so those are what I'm looking for distribution days, and we haven't yet, like, this is an accumulation day because we had a good bounce the day with higher volume than the previous day. These are not accumulation days for me personally because they have lower volume than the previous day. And so when I'm looking, I really want to see, I'm really looking at volume very, very heavy where back here you see these couple days you have a high volume, a little lower, but you always have these skyscraper volumes. Then you have a pause day and then high volume, higher than average volume, higher than the day before, higher than the day before. These are all accumulation days. You can tell that they are high, the volume is higher than the day before. The average volume is picking up, starting to get it higher. That's something that we look at. And so that's something that I'm keeping note of, but nothing that I'm really doing anything about right now. The one couple things that I had mentioned last week that have been working out well. DXY still looking like it's wanting to bounce a little bit. I'm very interested. Let me get rid of some of these drawings. It's still looking similar to this. This and this. These couple boxes, they're kind of templates that I'm using to see how the market's doing in comparative. This 10-week moving average is going to be a huge one though. This 10-week moving average, once it starts mellowing out, because it's straight down right now, so that's still, you're still in a heavier downtrend. So once it starts flattening out and rising, if we get above it, if we don't reject here and we get above it as it's starting to flatten out, maybe in a week or two, this is still looking at least bullish for a move up to these highs. I was mentioned this on the Sunday stream with Casper that I've been eyeballing these highs very much lately, and specifically because there's a fair value gap right above them. They're pretty much at the 50% right here. So you have those highs, you have this fair value gap here, you have this previous high that got rejected at the same spot, and my guess is, yep, it's right about the 50% mark for for a fib. So if you do, some people do just from body to body, and that's right at the 50% mark. Some people do wick to wick. I don't care which way you do. I think it's minuscule, the smallest little numbers that it's making a difference, so I don't give a shit. But it's right at that 50%, right, getting into a premium. So I'm still looking for DXY to get up to there before moving further to the downside in a heavier way, before maybe it'll come right here. Like if it gets rejected from this level and respects this order flow, this bearish order flow, then I'd expect it to come back down to this 99 or 100 and 100.8 level again. But DXY historically in February is more bullish, like towards the end of January. So like, see, this was January 2023, which is pretty perfect for a example. January 2023, going into February, end of January, going into February, had a huge run up. So maybe something similar to that could happen. That's kind of what I'm looking for on a weekly basis. On a monthly basis, it's pretty much you're having right at this. You came down into this fair value gap, came down in, and you're just holding right above this 2020 high. You're holding right above this 2017 high, holding right above this 2015 high. So I really expect it to bounce here. Next, JPY. We've been freaking killing it the last few days. Last week, I mentioned that I was bullish on it. I was looking for it to come up to 146. That was the 50% mark from high to low, here to here, 146.10. We tapped that to a T. It couldn't have played better. I was expecting it to take a couple more weeks. I was expecting this to last a week or two. I wasn't expecting it to just go all out in 1 week, but it was cool. It was fun. And yeah, so I'm still pretty bullish on the yen right now. This last previous daily candle right here is really, really nice. And so if we could the next day, so like this daily candle is going to finish in 16 minutes. The next day, so tomorrow, if we don't undercut this low right here, then we'll probably we'll create a swing low on the daily chart, and that'll give us room to push at least back up to this 146. If not, because we got equal highs right there. If we don't push back up to that, if we continue higher, then probably up to this 147.50 level would be my next just target, just based off of highs. You could do that, and then 158. I always do conservative targets. So that's what I'm looking for the yen. I really, really like longs right here. I'm actually probably gonna get into them. The futures don't open because I trade this on my Top Step account. The futures don't quite open yet until for the next hour, so I'll probably watch it through the spread hour and watch like a maybe do an orb or something throughout the futures. DXY on the 4 hour, I actually wanted to point out as well that this is looking pretty solid. We're stuck in this little mother bar. This is what I call these huge bars. I can't remember who the hell I learned that term from, but that's when you're stuck in this huge bar. You get a huge outside bar just like this from like a NFP or whatever the hell it may be. This was from NFP specifically, but once you're stuck in this, it's just I call it's a mother bar because you're just in this stupid range. And then once you break out of the range, it's going to show its true hand on whichever way it's going to go. So as of right now, we're just kind of stuck like right here was a pretty decent example as well. Not as big, but you're just like you have this outside candle. It's always an outside candle. You have this outside candle right here, then you're 1, 2, 3, 4, 5, 6, 7 4-hour candles until you finally break below, and that showed its true hand of which way, and it continued to the downside after that. So I always look for I'm when I look at these mother bars, when they happen, I tend to look at, okay, well now we're just ranging in between it, and we're going to trade one of the ways is going to move out, or it's going to move outside of this bar. And when it does, it's going to continue that direction. We could come down here. We have a few equal lows, it looks like, right here. If we undercut this and then continue, and then start continuing higher, I would look to push. That would give me a perfect reason to push back up to this 104.50 that I'm thinking that we're going to come back to. Couple things that have been very strong over the last few days, that have been unusually strong in the last few days, is XBI, and this is right at its 200 EMA on the weekly chart, but it's starting to break out from a stage 2 base. It really wants to. This is the strong high right here from April 4th. It's 97.15. That was the high that made its lowest low right there. So, and we've been stuck making lower highs ever since then. But we did break this little trend line. Oopsie. Did break that little trend line a couple weeks ago actually, and it was showing a push above it now. Once we get and hold above this weekly 200 EMA, and then above the 97.15 level, we'll look for a pullback again, hold the 200 EMA on a larger time frame on like a weekly chart, use that as support, and then look to come probably up to this 135, 118 level, somewhere around there. You are seeing huge moves in a lot of these biotech stocks. This one's really nice. Is RXRX. It's kind of extended now, but if you could see a push down, a small retracement above 1676, this is just gonna go crazy. There was, what was that other one I was looking at? BBIO. BBIO is another weekly chart that I've been watching for a long time. Had its breakout, now it's retesting that. Same with this level right here, this level from 2020, this level from 2020, and this level from 2020. And whenever it does get above that, it tends to come right up around this $50 level. So I'm watching BBIO as well to see if we can hold this pivot here and continue higher. So actually a really nice setup. Yeah, and on monthly, you have just this easy monthly chart breakout, very similar to like an orb breakout, except on a larger time frame and looking to come to that next high. A few other ones that were incredibly strong that had their breakouts. Nvidia, we mentioned this on Casper, and I both mentioned this on um what's it called, on Sunday, that this looked, I mentioned, Casper just mentioned that it looked really nice and ready to pop. I mentioned that it looked very similar to a Mark Minervini VCP pattern where you have pullback, you have an 18% pullback, and then you have a 16% pullback, then you have an 11, and then you have a 5% pullback. So every single pullback is getting smaller and smaller and smaller, building up energy for a breakout right here. And that's exactly what it did. It broke out to almost to 550 today, got to 453. Had great volume yesterday on the initial breakout. We could see a pullback back to this 500 level, retest, and see how it reacts for there. If not, it doesn't just continue from here. SMCI, another one, which this one is one of the heaviest holdings in the Russell 2000. So this is a good thing for small caps. I continue to think that small caps are going to be a good play and a good mover over the next month or so. And that goes with XBI. Biotech stocks are very good and very always small caps. So that kind of works together really, really well too. Um, SMCI this morning, I was kind of curious of if it was going to get rejected and react at um, this inclining like exhaustion risk style of trend line, very similar to like a broadening formation there, and it just sliced right through it. And so SMCI is very strong. You see, I really like these um these buy spikes right here. You just have a beautiful amount of buy spikes. This one sell spike is due to earnings, but you closed, look at where you closed. You closed at the higher end of the day's range. You have just a great amount of buying pressure. And then yesterday, you had a good breakout day where it had high volume and then increasing volume today, which is exactly what we want to see. We're not seeing a lot of continuation in some of these other stocks. They're starting to look okay, but they're just lagging. Like Tesla, just laggy. Apple, laggy. Very not. Actually, Apple has a very nice base forming, but it is just kind of lagging the market. Another really good one I like is Gap. If it can form another smaller base right here out like a right shoulder down to this $20 level, this might be a decent range because it's got 6 weeks tight. 6 weeks of tight action now, which is exactly what I want to see. I like seeing like these 6 weeks of just kind of this is called a flat base right here, where you just see just a flat kind of nothing for 7 weeks is really ideal, but 6 weeks is cool. So like this base right here, right, a heavy move to the upside, a base undercut on this previous week. And that just gives me more thought that we're gonna go back up to this 25 level right here. Gap's a really good one. Actually, when you really look at it, low, higher low, that would create this being that right here being a weak high. So that would be my next target after this 26 level. So Gap is another one that's I think is going to be very strong. A lot of these kind of Gap, KSS, Macy's, Cole, JWN, American Eagle, these are very strong right now. You got 5 weeks of just inside this mother bar on the weekly. KSS, you got 4 weeks, 5 weeks inside of this mother bar. So you're starting to see really nice bases. KSS looks like Gap before it went crazy. You have a double bottom on the weekly. Once it breaks above this midpoint, the shakeout plus three is what they call it on in IBD terms. So you would just add $1 to your buy point, and that would make a $30. Well, add $3. That would make a $30 buy point for a target of $35. Pretty pretty simple on that one. And then above 35, like it could form another like shoulder like this, but then I'd be looking for 63. And so Coles, I remember watching this. This is a really nice, yeah, this range right here. 35 is above 35 is always into the 50s and 60s levels. It was holding this range for a long time and then it finally broke down. Some that I was looking at that had shakeouts that are starting to perk up again is the airlines. AAL had a shakeout last week, and so we'll see if it can hold a pivot above this week, the high from the 11th, and that would give an idea for a look up to this 200 EMA right here. Very similar, the same setup, a 5-to-1 buy-in somewhere in this consolidation range. Stop loss on a weekly close below your anchored view up from this high, targeting this high right here. So this one is another one that I really like. I think Delta I liked a little more just because it's already above the weekly EMA. And so you would just be able to target this high right here at right around $50. Gold is kind of playing out exactly very similar to as I was thinking as well. It's just kind of It's in this bar right here. So, like I say, mother bars, like these things play out really well when you find them and start seeing them more. It's like, boom, this is a mother bar. It's just a huge bar like that. That's a mother bar. We're stuck inside that range. There's not a lot to do while you're in a range until you get. And I mean, Ottman is the guy for gold. I just kind of do more long term, where I still think it looks like 2009. I still think there's a ton of liquidity up here at this 2150 that's gonna get taken out. And I'm don't know how Ottman feels, but I feel like this is continuing to be bullish on a larger time frame. But I'm still kind of bullish into January because I want January to end bullish. A bullish January makes me incredibly like if we get January to end bullish plus everything we've gotten where we had Dow have the Santa Claus rally, we had the S&P 5 all your indices have your first 5 and then if we close January bullish, that's the trifecta effect where you get all three of those. That's way more bullish for the whole rest of the year. And so then it's like any pullback that we get that's 5% is a buying opportunity and look for a lot of buys. One other thing for your crypto guys is this USDT.D. I have been talking about it. It is still looking pretty nice. Actually could be forming a swing low right here where you have a low, a lower low, a low, a lower low, and a higher low right here. And so we could be forming a swing low. It's actually going to be an inside week most likely. And from what I don't know for sure, if the the Bitcoin ETF is supposed to drop within the next few weeks or days even. And if you look at Bito versus Bitcoin, let me go to a new chart. And everybody says this is different, and that's fine. I don't care. I'm a sell the news type of fellow, type of person. Bito, BITO. This is the first Bitcoin ETF. A um it is a futures ETF, not a spot ETF. So there is a lot of differences with it. But to each his own. Bito ETF come out. That was the high in 2021. I'm not saying it's going to happen again, but I that's cool. That's cool if we do have a little pullback. USDT is kind of confirming that if we can hold and continue to hold this 200 EMA on the weekly chart. I mean, we have one, two, three, four, five. One, two, three, four, five. So within the next few weeks, this one consolidated a lot longer, but it doesn't look quite as much like this. It looks more like this right here. And a lot of what I do is just go back and see what it looks like previously in previous patterns and base them. It's fractals really. Yeah, I think this is still gonna bounce. A lot of people have been looking at the 4 hour and watching this 4 hour EMA and notice now that your 4 hour EMA is starting to flatten. It not yet, but once you see right here, it flattens, you consolidate as it goes flat, and then it pumps. And so you're probably going to get a consolidation as this flattens here, and then as the moving average starts rising, you start seeing a push. So boom, and then moving average I mean, it doesn't go that fast, but it goes more like, it'll actually probably be more like this. Because it's a 200. And so you'll see a lot of just consolidation in between as it's flattening out. You'll see these up and down, just shit like this. And I don't know exactly where it's going to go and when it's going to go. anything like that. All I care about is this low not getting broken right here. If that low doesn't get broken, it can confirm a swing low on a weekly and start creating higher lows, and then that'll show more signs of accumulation and then start making its way up. And so that's one of the huge things I'm watching. So if anybody has any questions on any tickers or anything that they're watching as well, let me know. If not, that's pretty much all I have for today. I'm just curious to see how much if we're gonna go straight up from here or gonna continue a smaller pullback or consolidation. I do CPI and PPI will really, really, really be the huge tall tale in my opinion. You review Toast TA? No, thank you for reminding me. Toast. This one is I really like it, but it may not be ready yet. That's why I got a little longer expirations. Because we have this beautiful, like, if you take off my moving average here, it's just a very clean, you have a bottom, a head, and a shoulder right here. You could come down similar to here, back to one of these levels of 1760, create a higher low, and then come back up depending on how the market is. Everything is dependent on the market because it follows the market. But I just really like this base that it's forming right here. And then the targets would be right at this 22 and then 24 level. On a weekly chart, you're in a lower end of your range, which is really what I want. You're kind of in the middle, but closer to the bottom end of the range than the high end of the range. And it's looking like it's forming a swing low on the weekly chart. See right here, you had a nice shakeout and then a continuation this week that would bring a move right up to these highs, which was also a pivot point in October 2022. Toast to me, so you have in an IPO's um, life cycle. You have different phases of it. And so the phases you have in IPO life are your IPO base, and then usually you have an IPO advance phase, and then a failure, a due diligence, and then the real IPO move. And that's a base model of your IPOs. You have your IPO base and a quick advance, a failure of that, undercut the base, it's called the institutional due diligence phase, and then a pump to the upside. And that's your institutional advanced phase. That's your longest, your biggest, and your best move to get into. And so that's what I'm looking at for Toast. I'm looking at right now, we are in the institutional due diligence phase. We're kind of towards the end of it, in my opinion. It's because we finally undercut this low. We're starting to create more strength. You're starting to see these small clusters of buys. This sell right here looks very, very um, like exhaustion. Let's see the word, because a lot of times when you see the highest volume that it's ever had, then it usually means that it's going to reverse the other way. TLT is an example of that, where we had the highest volume that it's ever had down here, highest sell volume that it's ever had, and then we started reversing to the upside. TLT is probably going to come down to 92. That's where I would look for longs. And so that's what I'm looking for Toast is I'm really looking for it to come back up to this 26 level. That's the final target. But a break above 19 is the start, and then to come up to 2280, 24, and then 26 would be my end target for a shorter term. Like I only got February, so I'm not trying to trade that for. I'm trying to get out of that within 20 days, I think. 21 days till expiration. So I'm trying to get out of it within 20 or 22 days or so. A really good example um, is Path. If you're looking at like a IPO life cycle, This one didn't have an IPO base either. IPO base, failure, institutional due diligence phase, break above your strong high. There's your strong high. Break above your strong high. Form. Now, usually what happens is, like a lot of the crypto trades Bitcoin Playboy has, you break above your strong high and then you form another small base like this. And then that's called the first mature base. So actually, that's the second mature base. This is your first mature base, break above the IPO price, then second mature base, and then you see an IPO advance phase. And that would be, as it's coming up, you'd see have targets more up to the very high end of your range. So I'm looking at that with a lot of these IPOs. I actually have a fat list of, um, let's see, how many are there in here? Because most of the IPOs right now are still in their IPO due diligence phase. And so they're not quite in their IPO advance phase. And so it's really good that we'll be able to get in it as they are. So like pins, this is your IPO base, a small IPO run up, failure, institutional advance phase, institutional failure, institutional due diligence phase, institutional or IPO advance phase. This is the institutional advance phase. So now you're starting that on pins. CrowdStrike, very similar. Actually, which one's the one I was looking at? Yeti. This one's very clean. There's your base, your run up, and then you have an instant. Now you have this long sideways, long sideways movement, and that's a lot of the what I'm looking for now is like a break above these strong highs and then a small retracement. I really like Airbnb too. This kind of has a similar look as Toast, just with this potential higher low right here, would target right up to 150. Trying to find a good IPO base. Yeah, ARM. ARM is very clean. IPO base right here. Your first ever base. IPO base. Breakout. That's your, now we're in an institutional advanced phase. I'm getting them mixed up. IPO advanced phase. That's it. IPO advanced phase is the first one, institutional advanced phase, because so this is your original people, your people that are newer, your retail, they're trying to get in, they're trying to flock towards this. And then it bases out, then usually what it does is it undercuts your IPO base right here, comes down, undercuts it, goes sideways for a year or so, 18 months, and then breaks out again and breaks above that previous low. Duolingo, as I'm thinking, this one's perfect actually, because this is starting its IPO, um, its IPO institutional advance phase. So your small base right here, small IPO base, breakout, IPO advance phase, IPO failure, undercut its whole IPO price, institutional due diligence phase, first breakout, then if it forms another base, that'll be your second breakout. Now it's finally broken above its all-time highs. And now when stocks tend to do that, they tend to continue a lot higher in strong markets. So once we really start moving, this is going to be a huge stock that I'm going to be watching very heavily as well. So I'll send a list out as with everything. There's kind of I watch a lot. It's mainly IPOs for me right now though. IPOs, small caps, those are the main things that I'm looking at for stocks and options for swing trades. For Everything else, I'm watching DXY, I'm watching UJ for day trades and some small swings. But yeah, those will just kind of go with it. So if there's no other questions, I'm gonna go ahead and I'm gonna head out.